No meat companies, no mining companies, no oil companies, no textile companies, no companies that pollute. What can I invest in? Welcome to my channel, everyone. My name is Michelle Hung from the Sassy Investor, your go-to channel for everything to do with personal finances, investing, and money mindset. In this video, I'm going to be talking about socially responsible investing and how you can make money while supporting your causes. The first tip is to focus on what you want to support as opposed to what you don't want to support. When you start making a list of all the companies and industries that you don't want to support and all the relationships and affiliations with other companies and industries, you're going to start driving yourself crazy. Kind of like, I can't support fossil fuels, including all the banks that finance these fossil fuel companies and all the transportation companies that support these fossil fuel companies. I'm never traveling on a plane again, never getting on a bus again unless it's an electric bus. You're going to spiral down this rabbit hole thinking about how fucked up our world is, and it's just going to make you upset. It doesn't help anyone, certainly not going to help you when you're just going to ruin your day. It's kind of like berating someone for everything that they're doing wrong and not providing any solutions for them. You suck at this. You're doing everything wrong. What is wrong with you? Can you do anything right? Why are you doing it like this? It's not going to solve anything, and then you're going to question whether there's anything left for you to invest in. Yes, there are a lot of terrible companies out there, companies that are enslaving kids in developing countries, spewing a disgusting amount of pollution and leaving a very high carbon footprint. But let's not be hypocrites here. Clothes that we wear, cell phones that you use, all came from somewhere. You probably don't want to know about all the inputs and where they come from. Let's instead appreciate what we do have and focus on our efforts in supporting those that are making a positive impact, whether it's directing our attention, energy, and even providing financial support to them. The second tip is to check out the socially responsible portfolios out there that robo-advisors have put together for their clients. Robo-advisors such as Wealthsimple, Modern Advisor, Questrade, all of them have created a set of socially responsible portfolios for your core. A huge issue prior to all of this was the lack of diversification because the screening criteria was too stringent. So it sifted out a lot of companies during the process and left investors with very little diversification, which was putting their portfolio at unnecessary risk. Not a good thing. Not only are people demanding companies to do better when it comes to environmental, social, and governance impact, but investors are demanding that as well. This is why ESG investing surfaced. And you'll see a lot of this when you're exploring socially responsible investing. ESG investing is a combination of making sure the company is profitable while making sure their impact on these ESG factors are being met. On a lot of these ETF websites, you'll see a section with their ESG ratings and the types of industries they're exposed to that are not considered ESG friendly. Check out the robo-advisors websites and see what types of portfolios they have put together for their clients. And because these portfolios are comprised of ETFs, you can dive into each ETF and decide for yourself whether this is something you would like to add to your portfolio, or you can just simply copy what they have put together. The third tip is, before you make an investment, ask yourself if you're trying to support an entire industry or a specific company. For example, if you're thinking about investing in electric vehicles, but all you can think about is Tesla because it's super popular and it's the dominant company in this space. So before you jump in and make that investment in Tesla, based on those two options alone, first, consider other companies in this space. Tesla is not the only electric vehicle out there. There are companies like NIO, Fisker, GM, Nikola. And if you're like, I want to invest in the entire industry, including the lithium battery makers, charging station producers, autonomous driving technology, basically everything in the supply chain, then invest in an ETF that covers the entire sector. Remember, just because you're investing in the most popular company in the sector doesn't mean you're getting exposure to that industry. When you invest in individual stocks, you have to look at other fundamental factors like their business model, their projected profits and valuation, and how they can protect their profits from competitors in that space. Investing in individual companies require a different approach, which requires more time and effort. But if you do your due diligence and exercise patience, it will pay off in the long run. That's all for today. I hope you found this video helpful. If you have any questions, please leave it in the comments below. I will see you later.